We are in the Samrit Kal, where over the next 25 years, we are likely to become a Viksit Bharat. We've never seen 1.4 billion people as determined as they are today.
What do you think is fueling when it comes to the mutual fund industry?
I think the 4 or 5 things that have worked in our favor. Number one is the second I call. The third is that
Navneet Munot is the MD and CEO of HDFC Asset Management Company. He overlooks over 7.5 lakh crore in mutual funds. Today, he will share how you can tap into opportunities in India's $30 trillion journey by 2047.
AI is a big transformation, and there's no business, there is no organization which won't get impacted by this.
You know, the national debt, it's projected to reach about 158 lakh crores by 2025. How do you see us managing the debt effectively? So Navneet, thank you so much for joining us. Let's talk about India's big dream, Viksit Bharat, $30 trillion economy by 2047. I just want to understand from your standpoint, looking at the macros, all that we've achieved, Modi 3.0, how far do you think we've come and will we really achieve this goal? Is it looking realistic?
Thank you, Aman. Always a pleasure talking to you. And we are in the Samrit Kal, where over the next 25 years, we are likely to become a Viksit Bharat. We are likely to become a developed country. And this journey is going to be fascinating. Moving from $3.5 trillion to 25, 30, there are various projections where India would be. But we are pretty sure that would be substantially larger there than where we are today. India has got democracy. India has got demographics. India has got demand. India has got development in terms of infrastructure, what we are doing, and I'm going to talk about it. And India has got determination. We have never seen 1.4 billion people as determined as they are today to do well. And I think that gives me confidence of the journey that India is likely to have in this 25 years of Amrit Kal.
Absolutely. I think the demographic dividend is working in our favor, but then there's another D that's not that promising. And that
digitization, in fact, I don't know whether I mentioned. So I keep talking about it. So it's democracy, it's demographics, it's demand, it's digitization, and it's determination. And on the digital side, India indeed is a developed country. India is a Viksit Desh. There is no other place in the world other than maybe one or two in Asia who can boast of the digital public infrastructure that India has built.
No, we've seen major strides in that, but unfortunately, I want to talk about a D that's not so positive, and that's debt. The national debt, it's projected to reach about 158 lakh crores by 2025. I just want to understand, given that it's about 82% of the GDP, the fact that we've had the rupee depreciation as well, how do you see us managing or servicing the debt effectively?
So if you look at large part of the developed world today, in fact, they would have debt ratios much worse than India. The difference between India and them, they are growing at 1 or 2%. In fact, large number of countries, let's say Japan or countries in Europe are hardly growing. But India will have a much higher growth. So if you have a nominal GDP growth of 10, 11, 12%, and then if you are adding debt, which is much lower than that, over a period of time, this ratio is likely to go down. In fact, we were on a path of declining debt to GDP ratio. But the COVID again kind of like led to an increase in that ratio, because in that year, if the private sector is not spending money, if consumers are not spending money, then the government had to do the heavy lifting and government increased the debt in that year. But otherwise, I think our trajectory of fiscal consolidation, which meaning that government wants to borrow less amount of money than what they've done historically, is on a good path.
So what do you think will be the big expectation then in the upcoming budget with Modi 3.0? What is it that people want to hear?
If you look at last 10 years, I think we have achieved many structural reforms. Whether you look at GST in taxation, the simplification of direct taxes, you look at direct benefit transfer, which has led to a lot of savings for the government. You look at RERA in the real estate sector. I can talk about PLI for boosting the manufacturing. I can talk about Monetary Policy Committee framework, which is like keeping inflation at 4% as a commitment by the Reserve Bank of India. We can go on talking about all the reforms. I think it's about building on all of those and ensuring that we execute well. We have done a lot of work on infrastructure. We talked about the digital infrastructure, but even the physical infrastructure. There's roads, railways, renewables, ports, airports, broadband network. I think you talk about any physical infrastructure, and the government has been investing heavily. I think that direction will continue. The one major thing I would look at, I think, is increased spending or increased outlay on social infrastructure, which is education, healthcare, skill development. Those kind of things is where we need to focus more.
Yeah. And then there's also the China Plus One strategy. If you would like to just elaborate on how we as a country stand to be a beneficiary.
There's a tremendous opportunity. The whole world is moving from a hyper-optimized supply chain to a more reliable supply chain. People have seen that in COVID, that if you have hyper-optimized supply chain, it can cause a lot of challenges. Also, given the trade war between US and China, there are many other countries who will have a benefit of coming across or maybe taking advantage as a substitute to the sourcing from China. And India stands to gain. PLI is a big boost. We have seen that in electronics. We have seen that in chemicals. We have seen that in some of the other sectors. The other thing that have happened in the economy, which is investing in infrastructure, has brought down the logistics costs. If you have better airports, if you have better ports, if you have better roads, better railways, it brings down the logistic costs, because India's logistic cost was substantially higher than China. Also, now China has an aging population. In next 20 years, China will see 20 crore people moving out of their labor force. India will see 20 crore people getting added to the labor force. So we are the ones who will have larger number of consumers coming into the market to buy stuff, and larger number of the people who will be joining the workforce. So it looks like stars are just getting aligned for India to see better days in manufacturing going ahead.
The stars are also aligned when it comes to the mutual fund industry, because I think the numbers speak for themselves in terms of the kind of AUM growth that we've witnessed, something like 43 lakh crores that we've seen just a few months ago. What do you think is fueling this growth in the mutual fund industry?
No, many things you rightly mentioned. I think the industry has grown tremendously over the last several years. 7 or 8 years back, the total monthly SIP flows were 4,000 crores. Now we're talking about 25,000 crores. Number of accounts 5 years back were 2 crore unique investors mutual fund industry had. Today that number is more than 5 crores. So we are seeing the industry growing, and then a bigger growth is coming from what we call in industry B30 towns, beyond top 30 towns. So we are really going to hinterland now. I think the 4 or 5 things that have worked in our favor. Number one is the track record. People can see several funds who have delivered returns over the last 10, 15, 20, 25. In fact, at HDFC, we have some of the funds which have been in existence for 30 years. So you have 30 years of track record. The second I call transparency. I think the mutual fund is one of the most transparent product, if not the most transparent product in terms of the disclosure standards that we have set for ourselves, and thanks to the regulator. The third is the technology, how easy it has become. So digitalization of finance is a boon for financialization of savings. It's become easier and easier for people. And for that acronym, I'm using the word, the fourth T is training, which is a focus on investor education. This is something very unique about our industry, that all players put together have come with this campaign called Mutual Fund Sahi Hai, where we are trying to educate people, trying to empower people, trying to enlighten people that don't get swayed by the volatility, invest for the long term, focus on your goals, invest in a disciplined manner. So some of these messages, I think they are hitting the right notes, but still we have a long way to go. There are still only 5 crore investors, and I think we have a very, very long way to go.
Yeah, that's just something maybe I wanted to understand, because yes, of course, the numbers are talking about SIP hitting record highs, the total number of folios growing, but in comparison to the rest of our population, It's just about,
It's very, very small. So we have a long
why
way
do you
to
think
go.
that is though?
No, but we have grown, right?
Yeah.
So there are two ways to look at it: glass half full or glass
Yeah.
half empty.
Absolutely.
Half empty is still, I mean, that's an opportunity. We have a long way to go. There are still only 5 crore unique investors. Half full is the pace at which it has grown in last couple of years is substantially higher.
But having said that, still, the mutual fund redemption, that data still continues to remain quite alarming, despite the fact that what you said, we've been moving only in one direction when it comes to the stock market. What is that really indicative of?
No, the data has been very positive. One of the good thing that we have seen in last couple of months, investors have become so mature that in the days, weeks or months where you see market fall, you see more subscriptions coming in those months. And that's a very, very encouraging behavior. That's a very positive, I would say, aspect now. That in the month of October, where foreigners were selling quite a bit and markets were down, we saw record flows, both in terms of SIP as well as the lump sum flows.
Given that you've been on this journey for so long, how much would you attribute to emotional quotient or behavioral aspects versus the intelligence? Of course, you need a mix of both, but if you could just tell us.
That's very important. I think personal finance is like, as people say, is 1% numbers and 99% behavior.
Yeah.
And that's the most important thing. And the two biggest emotion that everybody has, which one needs to conquer, are like greed and fear. You become too greedy when markets are doing well. You become too fearful when you when you witness a negative news and markets fall. I think overcoming those emotions or not getting swayed by some of the cognitive biases that we have. So one of the biases like a recency bias. So look at if let's say markets have been down for a few months or let's say a few quarters, then you think, no, I should not invest. Or the other way around. If a sector has done extremely well, people think that's the only place to put money. So you need to kind of be aware of those biases and ensure that you actually take advantage. And as I said earlier, don't get swayed by that.
Yeah, blocking out the noise is very important, isn't it?
Which is now easier said than done, to be very honest. In fact,
because you're getting alerts every second
exactly.
on your phone.
So I've grown in an era where we used to get like Economic Times in a small town in Rajasthan. Like we used to get Economic Times 2 days later. So I only know prices which were there day before. And that was a level of noise. And now you see like 24/7 channels to like a WhatsApp to a Telegram channel to all the social media and everything. So it's easier said than done. Yeah.
But speaking of that, you've learned so much over the years, but there's still investors out there and it's very typical of them. They see that little correction in the market and everyone says, oh my God, I'm done. My portfolio will be wiped out. So what's the messaging that
I hear from people and interestingly, we have seen tremendous growth in capital markets in last 3-4 years, particularly post-COVID. So mutual fund industry had only 2 crore investors around March 20, and then now there are 5. So 3 crore new investors have come. But I look at stock market, the demat accounts have gone up from, if I remember correctly, 4 crores to now some 18 crores. So 14 crore accounts have got opened in last 4 years. Now, large number of these people haven't seen a serious correction, except the one that they have seen recently in October. And I remember those days, and Aman, you would have seen on your channel that a 2% market fall and people will say bear market has started. When will this stop? And this is like part and parcel. I mean, this is the nature of the beast. Markets go up, markets go down. Markets always move like a pendulum. But the trick is to ignore that noise and remaining invested for long term.
Absolutely. Ride out the volatility. Like you said, take advantage of the volatility. So,
which is the way if you do the SIP, you are actually taking advantage, right? Yeah.
And you have a certified financial advisor who's giving you that advice all the time and hand-holding you all the way, right?
Yes.
Yeah. And I just wanted to understand the impact of macros on the mutual fund industry as a whole when we read headlines, for example, about GDP print, about food inflation prices going up. I know you said block out the noise, but I just wanted to understand the correlation.
No, sure. One should be aware of these things. And India is very interesting. There's only United States and very few countries in the world where your GDP has grown at a very good pace. Your corporate sector, which is growing revenues and profits in line with the GDP growth over a long period. You have a stock market which is delivering returns in line with that profit growth, and you have a mutual fund industry which is delivering that growth to an investor who's investing only 500 or 1,000 rupees per month. This has not happened, interestingly, in many countries. China had tremendous growth, but the stock market did not deliver. Their mutual fund investors could not make the kind of money that the economy delivered in terms of growth. But at the same time, the relationship is not linear. It's not that GDP has not done well in this quarter. That's why market has to go down, because not necessarily. Markets move like a pendulum. They move from one extreme to another extreme. But the faith people need to keep is that over a longer period, there is a correlation, and India, for the reasons that we discussed earlier, will deliver good growth, and you have a corporate sector that will deliver good profits. A stock price is nothing but the slave of the earning power of the underlying company. So ultimately, market will deliver those returns, and you have an industry which will deliver that return to you.
Yeah, absolutely. And what do you have to say about the strength and the retail strength that we've seen that's been supporting the market so far, the domestic institutional investors?
Yeah, so this year, the domestic funds have invested more than 4 lakh crores. And if I know my number correctly, foreigners have hardly invested on a net basis. So this is like a big revolution that has happened in India. We have become, if I can use the word, Atmanirbhar on the investments in capital markets. Of course, we need foreigners' money, and at some stage, my belief is they would come back and invest more. But I think this is one of the biggest, I would say, revolution in our markets, where the power of domestic money is much more than what it used to be. We always used to dance to the tune of global environment. If foreigners are investing money, then markets go up. If foreigners are selling, then markets go down. Now you see a very different behavior in markets, which is very heartening.
Speaking of a long way to go, there are targets as we set our sights on 100 lakh crore AUM. What steps do we need to take, and how achievable is that milestone?
I think keep doing what we have been doing. Ensure that we continue to deliver good returns to the investors. We continue to keep on building the transparency and right kind of practices in the industry. We continue to invest in technology to reach out more and more investors. And one of the important things that over the next several years, what we need to do is to reach out to more, I would say, an hinterland to the real Bharat. So we are seeing greater number of SIPs coming in from B30 towns, but there's still a lot more potential than what we have scratched so far.
And what about your views on NFO inflows? And, do you think NFO maybe would be a reason as well for the high churn that we see?
Not necessarily. I think the regulator and industry keeps an eye on all of that data. There could be asset managers who have a newer product idea, or maybe they don't have the product in their bouquet which they want to offer, and there's a need for an NFO. But we've always said that investors must look at funds which have got a long-term track record. And because the kind of data that we disclose, investors will get a lot of information about the past track record of that fund, and can help them in ensuring that they invest in the right kind of product.
So right now, given that you've spoken about the India long-term story looking promising, what do you think would challenge that thesis?
No, many things. While our exports are relatively a smaller part of the GDP, but still, if anything happens in the world, we also get impacted through something or the other. Maybe it may be through exports, it may be through capital flow. So we have to watch. The global environment has been highly uncertain and very volatile. There's this cliched word VUCA, but we are in a VUCA world: volatile, uncertain, complex, and ambiguous.
Wow, I've never heard that. Yeah.
It's a very famous, but it's a cliche. But we indeed in a VUCA world, and so we get impacted by that. And I think India would say we should not become complacent. We have been one of the fastest growing economy in the world, but should not get complacent. Need to work hard to become a developed country. And I'm sure, as I mentioned earlier, that 1.4 billion people are determined this time.
Absolutely. And you're on your way to that as well.
Absolutely.
And how much would you attribute behavioral biases, even when it comes to fund managers in terms of making decisions?
No, I assume that ultimately we are all human beings, right? But what you try to do is that, through your risk management, through your robust processes, through your robust research, and working in a team, what you try to do is then don't get, I would say, it doesn't, the performance doesn't get too influenced by some of those biases. And there are people who can help you in highlighting where there is a need for a course correction. So that's the advantage of working in a team, working in an institutional setup at multi-layered levels. Yeah. So we have there is a trustee board, there is a risk management committee of the trustee board, there's an AMC board, there is a risk management committee of the AMC board, there's an investment committee, internal investment committee. So at all of those forums, several of these things get discussed, apart from the investment team that works as a close-knit team.
Yeah, so clearly have a certified financial advisor doing all the work for you. Navneet, if we were to talk about the India story, one can't ignore the kind of rapid moves that we've been making in technology, something that you spoke about, digitization.
Yes.
And with that comes with it things like automation and AI. What does that do in terms of job disruptions?
So AI is a big transformation. I've said that humanity has seen agriculture revolution, it has seen industrial revolution, it has seen information revolution, the fourth biggest in human, I would say, evolution, which is the intelligence revolution. Machines teaching themselves. This is truly big, and this is truly transformational. And there's no sphere of society, there's no business, there is no organization which won't get impacted by this. I think the trick is to really adopting it. The trick is to adapting ourselves to the new environment. Interestingly, Jensen Huang of NVIDIA, when he was here, he said India has a real opportunity to move from the back office of the world to the front office of the world. In last 10 years, we have moved from the most data poor society in the world to the most data rich society in the world. We have the data, and I think we have the talent. It's up to us. How do we take advantage of the AI revolution? But this is a big disruptive force, and I think everybody must be, I would say, cognizant of the fact that it's a disruptive force, and we have to ensure that rather than getting disrupted, we disrupt others.
Yeah.
The second question was on
job creation, if it's going to impact.
Of course. So what we have seen I remember in 90s, almost in every industry, people were worried whether they will be able to keep their jobs when computers come on the desk. And I remember particularly in financial services, a lot of banks used to have regular strike because they thought that computers will do their job. Then what will they do? But today we have looked at in the last 25 years, financial services has created many-fold. I mean, the number of people working in financial services would have gone up many-fold than what they were. So every technology from that perspective has so far helped. But AI, as I mentioned earlier, is transformational. This is a paradigm shift we are seeing in humanity. And I think every organization, every society, all policymakers must be very cognizant of that. In fact, I have an interesting view that what AI can do is some of the jobs which are very routine in nature, which doesn't require too much of, let's say, skill set and creativity. But there could be many more other jobs, right? As people get more time for leisure, people get more, time for many other things. The things that are done by hand and mind, which is dealing with someone else through the emotion or through your creativity, or through your hands, let's say a physiotherapist or a stand-up comedian or a content creator or maybe variety of crafts, etc. And so they can become very valuable, very, very valuable.
You enhance your skills with the user.
And then some of those things.
Yeah. And given that we have a huge working age population.
But a pure number crunching or a very simple punching in some data here and there, I think those jobs will have some challenge.
Yeah, without a doubt. I mean, I didn't chat GPT these questions, but it's so easy to do that now. We have this working age population also in India. You spoke of the demographic dividend. 67% of our population is in the working age group. How can public policy as well adapt in order to enhance this?
We are clearly seeing, I think that a lot of the government programs, a lot of flagship programs over the last several years have been driven towards, let's say, Startup India, or everything that we are doing on the digitization, everything that we are doing on improving the quality of living, providing more dignified living to the people, etc., are driven towards reaping the benefit of demographic dividend.
Are you worried at all regarding all of this chat about Donald Trump coming into office and high import tariffs? Is that a worry at all?
I see. I mean, US is a very large economy. US is like the largest market in the world. Whatever they do will impact rest of the world. But I think we need to focus on our strength. And also, he's gone on record saying that, I mean, they would have a strategic good relationship with India. If, let's say, because of the tariffs they put, because of some of the other restrictions they put on imports from China, India could actually be a beneficiary because the whole China plus one can work in favor of India.
So, in order to achieve that dream, then, Navneet, of a $30 trillion economy by 2047, which are the sectors, what are the factors that you think will lead us to this growth?
So India has been like very unique in many ways. One, that if you look at the journey of many developed countries, they didn't have as strong a democracy as India had. In 1947, 15th August, we started with one person, one vote. Most of the other democracies didn't start like that. Women didn't have the voting power, by the way. And same thing on our economic model. So unlike many other countries where it would have been driven, the countries that have grown from an emerging to a developed country, the focus would have been on manufacturing, the focus might have been on fixed asset investment, which is infrastructure, focus would have been on exports. But India has been a very holistic growth. It will be agriculture as well as manufacturing and services. Yeah. It will be both consumption and investments. It will be both exports and domestic growth. So India's growth model is very different than most of the others. Similarly, like there are countries, let's say if I take the China, the growth was more state driven, whether it was the state owned entities or the infrastructure investment made by the government that drove the growth. In India, it's both. It's government investment as well as the power of entrepreneurs. So India's growth model has been very unique and there are opportunities across sectors.
How do you see us stacking up versus the other emerging market economies?
Relatively, I think we are in a very, very strong position. We've become the fifth largest. So from a size perspective, we are much larger than anyone else. And I think the overall strength of India's institutions, whether it's our regulators, I mean, whether you look at SEBI, what it does for capital markets, whether you look at Reserve Bank of India, the financial stability that it has ensured, all the other policy makers, the macroeconomic stability they have ensured, the power of our judiciary and all of that, I think we are class apart than most of the other countries. I mean, just give one example of capital markets. India is not talking about T+0. US, and we have been, T+1 for a very, very long time. You track markets. US has launched T+1 this year, and Europe will take a couple of more years to go to T+1.
Yeah, so we clearly have
that we are far ahead.
Yeah. So, given that we have close to 80 crore people that are currently relying on government subsidies, what do you think that this implies in terms of the kind of dependency when it comes to our fiscal policy, when it comes to India's economic growth?
I think in a democratic society, a high quality social security net is very, very critical. I think the government of the day must ensure that people have ease of living, people have a dignified living, a basic necessities. Let's say, and what the government has done in last 10 years is to deliver basic necessities. What it is a toilet. It's maybe a basic electricity, one LED bulb, maybe a solar panel on the rooftop, Pradhan Mantri that Awas, which gives you like, let's say, subsidized basic housing. You have the tap water. I mean, I can go on, let's say basic health insurance and the life insurance, basic pension and all of that, which is very, very critical. And of course, the 800 million people who get the food grain also, which you refer to. This is very critical in a society like ours so that the growth is sustainable. And this is what we have done. As a percentage of GDP, the number is not very high. And what has helped us in the last couple of years is, I think I refer to DBT, the direct benefit transfer, that leveraging on Aadhaar plus Jan Dhan Yojana and a mobile phone, the GEM Trinity as it is known, has ensured that there are no leakages in the last mile delivery. We have significantly improved the last mile delivery of some of these benefit programs to the intended beneficiary. And I think over a period of time, we need to ensure that this continues.
What about the concerns about tax rates increasing? Is that valid?
It's gone down in the last couple of years. Like our corporate tax rate used to be like, if I remember last 33% or so. Now it's 25%. The peak income tax, which was 43, now brought down to 39% or so. I mean, one can argue that there is scope for bringing it down a little bit more. GST rates, I think at 18%. I mean, the middle rate is at 18%. Over a period of time, as tax to GDP ratio goes up, the India's tax revenues as a percentage of GDP are still on the lower side.
Yeah.
And there's a lot of scope for that to improve. As that improves, I'm sure government will have ability to reduce rates more.
I just want you to give a bit of a messaging, maybe for first-time investors out there who have that trepidation in their minds about investing via the mutual fund route, saying that there's so many other options out there. I can make quicker money, easier money, etc. What is the messaging that you want to give?
So start early, invest regularly, and invest with a discipline. Mutual fund sahi hai. I mean, start through the SIP, systematic investment plan, and remain very, very disciplined at that. That's the trick to create wealth in the long run. There is only, I'll give this last message. There is only one formula of wealth creation in the long run. There is only one formula of wealth creation in the long run. And people can remember this. That's why I'm giving this acronym of that formula, which is STP. So one STP is systematic transfer plan in mutual fund industry that people know, but this STP is different. This is sound investment plus time plus patience. If you don't have a sound investment, if you don't give it time, and if you are not patient, you won't create wealth. There is no other formula. You can try many things. SEBI has come out with papers where they have said that, if I remember correctly, the last number, 93% people losing money in F&O. There were, I think, similar research where they talked about how many people lose money in intraday trading. People are doing many kinds of things, but you cannot create wealth by doing those kind of things.
So just staying with the behavioral aspect, Navneet, we're talking about how you should be patient and ride it out when the markets fall. But what about when we're on a strong growth trajectory like we have seen? What behavioral aspects are critical to capitalize on this?
No, absolutely. You need to take faith on the long-term prospects of India's growth. You need to take a longer-term view. We talked about the last 30 years, but the next 25 or 30 years are going to be phenomenally positive for India. And the best way to participate is to remain invested. There would always be volatility. The returns in a stock market don't come in a linear fashion. It's not like a deposit or some other instrument where interest get credited in your account every 3 months. There would be times where a 6 month or 1 year will give you much higher return. There would be time where the returns are going to be lower. That's the nature of the beast. Markets move like a pendulum. But over a period of time, this will reflect India's growth. This will reflect corporates' profits, and you will get those returns from the fund. So trick is to remain invested.
Thank you so much, Navneet, for speaking with us. There have been, I think, lots of pearls of wisdom that you have shared. And I just want to sort of sum up what Navneet has spoken about. The fact that the long-term India story is looking very promising. We are on our way to becoming a $30 trillion economy by 2047. The demographic dividend is working in favor of India. But as an investor, you need to be patient, ride out the volatility, take advantage of the volatility. Take the advice of a certified, unbiased financial advisor. It's important to have a track record, set your goals, have holistic goals, and be disciplined. Sound investments, time, and patience, STP, is critical for investors. With that, thank you all so much for watching. Take us through any key takeaways in the comment section that you've got from this episode. Do remember to like and subscribe to Personal Finance TV. I'll catch you in the next episode.